The way coffee ecosystem in India grew from 10 rupees tapri coffee or a chai joint or a coffee joint to a simply cafe. And it went from 10 to 300. So there was no kind of movement. In any consumer product, there is a journey of base product, premiumization, luxury. India went from
Mm-hmm.
base product to luxury in one shot. It
Right.
really from the entire
Yeah.
phase.
Hello and welcome to India Retail Network. We bring to you a podcast series where industry leaders and experts help us and join us to decode and unpack the opportunities and complexities of India's dynamic retail landscape. And today I have Abhijeet Anand with me. Abhijeet is founder and CEO of abCoffee. So thank you very much for coming on the show, Abhijeet.
Thanks a lot, Russell. Glad to be here today and happy to chat further.
So I'll start with coffee has been a very difficult business to get into, because the success rate has been very low in India. It's almost like airlines business. Behind every success story, there are 5, 10 flop stories. What prompted you to tread a difficult path?
Got it, Russell. I think you have taken an excellent example of airlines, right? So I'll start with airlines. Who do you think is the best successful airline in the country?
Indigo?
Fantastic. And in the past, we have had Jet Airways, Deccan, many Vistara, and several others, right? I mean, but the
Yeah.
best airline that has performed well, that has been profitable for the shareholders, almost has more than 60% of the air share, right? Traffic share is Indigo. And what's different? Indigo is no frills flying, right? So it's consistent, it's similar experience, low cost, made for India. Hence, it's a successful model, right? And every other model is a very loaded model, and hence a lot of models have actually struggled over the course of period. That's up coffee for coffee industry. We are great coffee, right price, no frills, a product company with no frills attached in and around the coffee business. Unlike the cafes, which actually have a lot of frills attached, and hence it becomes unsustainable for the majority of the country to even enjoy a good cup of coffee or a tea cafe in an outlet. So, to put right on point, we are that on the go coffee chain with no frills, great coffee at one third the market price. And that's what defines up coffee in its nature. And a lot of the back end is tech enabled, which helps to make it process efficient, management lean, and then pass on the benefits to the consumer. Exactly what Indigo does in airlines industry.
Okay, so low frill, right? And I'm sure you would have done extensive research before getting into this kind of segment, because otherwise most of the cafes are high end, premium kind of positioning. You entered this segment, which is quite economical. What did your survey show?
If you look at the landscape, right, there are plenty of coffee companies in the country, right? And you may not even be able to count on your 10 fingers as many. And most of
Yeah.
these coffee chains, they're not coffee chains, right? So the way coffee ecosystem in India grew from 10 rupees tapri coffee or a chai joint or a coffee joint to a simply cafe. And it went from 10 to 300. So there was no kind of movement. So in any consumer product, there is a journey of base product, premiumization, luxury. India went from
Mm-hmm.
base product to luxury in one shot, right? So there was
Leapfrog,
never,
right?
it
Right.
really from the entire
Yeah.
phase, right?
Mm-hmm.
Hence, the
Mm-hmm.
coffee adoption in the country was very slow, is very slow, right? It's just picking up in the last 4 years, right? And because of various factors. So what happened is a lot of coffee companies pivoted themselves to as real estate units than coffee selling companies, right? So hence, all these cafes operate at more than 90-95% gross margin, yet are unprofitable because the transactions are not as well converted because there are not as many takers of the coffee, right? It's a chicken and egg problem. There are not enough people to drink coffees at 300, and cafes can't reduce pricing because there are not enough people drinking coffees at 300. So it's a cycle that never ends. And that was the insight into the my entry into the or our entry into the ecosystem was that to build a no-frill company which does specialty coffee grade coffees at one third the market. A coffee's a starting price is 77, cappuccino is 97, coffee is rated 80 plus single origin, says that coffee wins and not the ambience. Right, that's the problem statement we are solving. Coffee as a daily use product than as an incidental or a meeting point product. And this is the insight I got that India since 2019 and specifically after post-COVID, because Gen Z is in workforce, younger generation, coffee first people, there was a huge demand of coffee. But unfortunately, most of the cafes, they're not serving to the demand of coffee, but we're serving the demand of real estate, which sells coffee. Right. And hence we entered the market coming as a product company to become the daily coffee partners of the people, and then expanding the TAM or the horizon of people who can actually afford, drink, and make it as a daily habit to drink fresh coffee.
You made an interesting observation, like, saying that the Gen Z is coffee first generation. Is it so?
Oh, it's incredible, Russell, right? So
Because
if you
the
if
reason
you
I'm asking is, like, we still haven't taken off. You see in the West, you see in America, Europe, or even in countries like China or South Korea, where people, like youngsters, Gen Z kind of kids would grab and go. You will see a lot of them holding coffee cups. But you don't see that's very minuscule in India. Like, so I just wanted to hear it from you.
fantastic, Russell. Let's divide into two parts, right? One is
Mhm.
grab and go. Second is coffee as a consumption.
Right. But you're
Okay.
in grab and go, right?
Correct. So, grab and go is a behavior. Coffee consumption is a consumption pattern of a country, right? So,
Right.
let's break it down into two parts. When it comes to your primary question, Gen Zs, right? So, Gen Zs, a lot of younger population are coffee first people. Let's derive to how. So, if you look at China, a tea dominant country until the year 2000,
Mhm.
coffee consumption starts picking up. Today, China is a bubble tea and a coffee market, right? And the larger phenomena happened post 2014. Why? Because the GDP of the country increased incredibly in the last 3 decades. Disposable income started increasing incredibly well. And also, coffee became as a functionality product, right?
Mhm. Mhm.
Now, that's a very typical thing whenever an industrialization happens in certain catchments. India, on the other hand, moved into this path only in 2020s. More than a quarter of population is under 30, young population. The disposable incomes have increased. The industrialization is picking up very fast. Hence, the coffee now people are now moving towards coffee as a functionality drink. They need that hit. And you will hear reports coming out that a lot of younger population are moving away from alcohol, right? And they are moving towards functionality, productivity drinks. And what is a productivity drink? That's protein shakes, caffeine as a whole, and also healthy factor comes in, and then coffee takes you as a daily fuel kind of beverage. Hence, if you go around the country and you talk to youngsters, like me, I'm a chai first person, right? But a lot of youngsters are coffee first person by default. Like 54% of our customers are aged under 25, right? And not just us. If you take a group India survey, you'll find there are three kinds of people: under 25, 25 to 30, 30 plus. 30 plus people are actually the coffee. They're either a chai person or a coffee person for life, right? They know what they're drinking, and then they're very clear. And coffee people are evolved into exposure, lifestyle, functionality, etc. But 18 to 25 people are by default now being born as a coffee first people because they saw Netflix. What do you see in Netflix? Person with a cup of coffee. Globalization kicked in, disposable income kicked in, healthy habits kicked in, and people moved into drinking black coffees, flavored coffees, and different kind of coffees that gives them the morning kick or an afternoon kick, or sometimes even late night kick to work late nights. So that behavior has evolved fundamentally. If you look at the CAGR in the coffee market, it's in double digit. If you look at the CAGR in tea market, it's low single digit number, right? So that explains to you how the market is evolving so fast, and that's what we're trying to solve, become as a daily coffee partner.
You gave an interesting example of China, where coffee drinking just took off, right? What GDP per capita level is the sweet spot? Like, and what point did it take off in China? And we are also at the cusp of happening something, repeating something like that. What was the point?
So, Russell, I don't think there is a definite number for GDP because
Okay.
GDP and the spending capacity both go in tandem, right?
Right.
A GDP of US is multiple times that of India, but the spending, the expenses level is also very high, right?
The reason I'm asking is a lot of retailers say, like, if we hit $5,000 or $6,000 GDP per capita, that's where things are going to explode. That's where consumption for everything from food to fashion is going to explode. Is that something you also agree with, or the coffee consumption has already started at $2,500 level, which we are in right now?
So, Russell, there are two factors to it, right? So, GDP is a average or median of the country,
Right,
right? And
right.
and it has to be linked with the cost of living. Now, a GDP of 5,000 is not the same as GDP of China of 5,000, right? It's a different world altogether in terms of that. So I don't think there is a number. The disposable income is increasing, and it has already started increasing the moment we started hitting on a median level more than $1,500 of GDP. But that quantum of number, the bracket of people, it will keep on increasing as the number goes up, because it's not that everybody makes 2,500, right? It's
Right.
a high income disparity level, and the first initiation is going to happen in metro cities, then borderline tier one, tier two, then tier two and tier three. However, the consumption is very different from that of retailers of food products, because food is something that is ingrained in your lifestyle. I
Right.
may not own a luxury clothing today, but I will definitely want to have what Rasul drinks, as long as it's priced conveniently. So a person sitting in Balaghat, or a person sitting in somewhere in a village in West Bengal, will also drink espresso-based beverages, because if that costs in the because $100 is for a roll, right? For an egg roll, and if I can get you a premium coffee at $100, it doesn't change the world for you. However, a person in Mumbai might end up wearing Zara, but a person in West Bengal still will be wearing Zudio, because that's a
Right.
different use case level. But to answer your question directly, Russell, I don't think there is a number, but definitely there is a merit in 4,000, 5,000 number, when that average wise the consumption will shoot. But I think it's already is in that trend where it's already shot, and people have already started spending in better food, in better taste profiles, and it already happened, because no more luxury. You also have to differentiate. Cafe coffee may be luxury. Up coffee is not. It's a functional product. So
Right.
functionality doesn't necessarily will always get linked up to a high level of GDP.
So at the price point, 77 rupees price point, are you trying to convert a lot of tea drinkers into coffee connoisseurs, or this is the sweet spot? This is the market where you should be in.
So, Russell, I don't think we are converting any chai drinkers. I think it's a chai and coffee market, right? Because it's a
Okay.
lifestyle-based thing. Sometimes you
Right.
drink chai, sometimes you base coffee, depending on what you want to consume. It's a beverage at the end of the day. But then what we are definitely trying to do is make it more accessible. To drink just a cup of coffee at 250, $300 does not make sense as a consumable product for everybody or for a mass. What we are trying to make it under $100, I think, is the sweet spot. That's what our research says. Hence, we have priced it very conveniently under $100.
And who are your target customers?
Three kinds. Number one, it's entire Gen Z, 18 to 25 people, right? Because they are some many a times on pocket money, they have limited budget, they are early in their jobs, so they have the spending capacity limits, etc., and they want coffee as a functioning drink. Number two is all the people who are on the go, right? Russell wants to sit down with somebody, will go in a cafe. Russell wants to have a cup of coffee, will have that up coffee because it's consistent, great, and rightly priced. But keep in mind, India is a value for money market. At the end of the day, value for money kicks in. That's in our DNA. Doesn't matter how much money you make, right? And that's what we bring on the table. Hence, our target is anybody who drinks coffee. If you are drinking coffee and you come to us for sitting in the cafe, we are not the place, right? We are not the people serving you real estate places and charging you 3x. We are the people who serve you great coffee for your daily consumption. Those are my target people.
And we have, like, global bigwigs like Starbucks is here, Costa Coffee is here, Tim Hortons. They're also expanding. Everybody is expanding. But everybody, if you talk to like executives privately, they would say unit economics still don't work. And even their coffee prices are way expensive than you do. Unit economics is an issue for them. If it's an issue for them, how is the unit economics working for you in your case?
So, Russell, I think most of the cafes in India, I'll give you a primary problem, right? The rental
Real
rates
estate.
in India is
Yeah.
very expensive,
Yeah.
right? Many of the
Yeah.
real estate in some parts of Bombay and Delhi is same as New York. However, the spending capacity is not as high, right? I mean, there is a huge income disparity level, and that's very high. Now, moment the problem is the cafes have chosen a path of real estate, which means they have to lease premium properties, road facing, most expensive ones. And think about who are competing with those spaces. A cafe makes an average revenue per square feet of anywhere between 1,000 to 4,000 at max, right? A
Yeah.
fashion company will make 20,000 to 50,000 per square feet,
Yeah. Yeah.
the same space, right?
Hmm.
So by default, your model is such skewed that your revenue per square feet is capped. Even though you enjoy a gross margin of 90% and a fashion retailer will enjoy a gross margin of, let's say, 50%, but the maths don't work. The gross margin of 50% should be half of what retailer makes, but it doesn't matter.
And
So
also the ticket prices, right? They have huge ticket prices, like
still,
the
huge
basket
is not
size. Yeah. Yeah.
fashion retailers,
Yeah. Fashion
not the
retailers.
F&B.
Yeah. Yeah.
Correct. Like
Fashion
in
retailers I'm
F&B,
talking about. Yeah.
like the cafes, I mean, they will have a basket size of 500 to 600. That's
Yeah.
it,
Yeah.
right? I mean, that's the average value that you can reach. Hence, there is a cap. to how much of table turns you can do. So you're not in the business of product. You're in the business of table turns. It's a very difficult process to make that work in the country. Now, having said that, I think there's a beautiful business in cafe and that people are building. However, is that expandable? It's something for us to see, right? Will there be thousand such units like they had in other countries? Maybe not. But
Right.
can we have 200, 300 units which are extremely profitable? Definitely. Because Bombay can have 100 of such cafes, but not necessarily Indore can have such 100 cafes and not 20, definitely not 20 players. How we are different is, Rasul, very, very clearly. We have not built a process of experiential cafes. We have built a process of small units. A lot of is tech ordered, right? So our app has like 40% of the transactions. Now, which means that people can pre-order their coffees. I have lesser staff at the store. I have operational cost efficiencies built in. And then I can generate more revenue per square feet. My revenue per square feet goes north of 4,000, which is the cap for cafes, right? Hence, I can generate more. At the same time, my cost per square feet is also low, right? Which means that overall number, although my gross margins are lower because I'm still serving premium grade coffees, and then obviously my gross margins are not the same, but my cost efficiencies and as well as the revenue capabilities from the same square feet just goes higher. That helps build the model a replicable, scalable, lean, and also more efficient.
And you build this network through franchises, mostly franchises, right?
No, as well, everything is owned. We
Everything
own
is
all
owned.
the
Okay,
outlets.
okay. And it's asset light, right? You know, it's not outlet. Outlet is mostly counter kind of thing where people can come and grab coffee, pre-order coffee, and all this. Something similar to Luckin, right? Luckin in China. When we talk about the Chinese success story, partly the people attribute the success to Luckin, right? And you are also model partially or fully on Luckin, right?
It's a similar model, you can call it, yeah.
Similar model, right? So how are you trying to make it work in India? Like, you know, Luckin worked in China. They're giving Starbucks a run for their money. How are you trying to make it work in India, in Indian context?
Right. So I think you meant Luckin worked in China and gave a fight to Chinese Starbucks there. So Russell, I mean, in India, what we're doing is very simple, right? We see that the coffee consumption is growing. We see they're coffee first people. They want coffee as a beverage. All we are doing is they're trying to meet the demands for people who are looking up for coffee. We have an Indian way of doing a lot of things, which is the kind of menus that we have. For example, food, right? If you look at cafes, a lot of cafes have 50% food and 50% beverage. And that's where a lot of gross margin gets hit. Us have 87% beverage. We're the only coffee company in the country which does that, right? Hence, we have a lot of leverage in terms of scalability and rolling things faster and also innovating faster, right? For example, this month we did something called as slushies, which are ice crushed, something, if you remember the ice golas, we have done that in the form of coffees and flavors. We just did Mango Mania. Next month, we are doing matchas. Now, in this way, we are rolling out products faster and hence bringing innovativeness in our beverage menu. And we have made it suit to the Indian palate.
Right,
We know
right.
what we'd like, right?
And
And do it in a different manner.
Indian coffee companies have raised something like $300 million from investors in the last 10 years. And at the same time, global companies are very gung-ho about Indian market. We talked about Starbucks, we talked about Costa Coffee, we talked about like Tim Hortons. A lot of companies are chasing this dream, obviously because of the reasons you mentioned earlier. But what I wanted to hear from you is like, you know, we have so many coffee chains now. Is there market for all of you, or how many players can India take at this juncture?
See, I think what everybody is having is a FOMO, right? With the coffee
Yeah,
consumption going, everybody wants to be the me too. If you have to take, I can't take coffee company's name, but if you have to take coffee company's name, you will not be able to differentiate among rest of them because everybody is AKA. Somebody's organic, somebody's sustainable, somebody's only Arabica, somebody's this and somebody's that. But at the end of the day, everybody does the same thing. They all have cafes, they're all large formats, they don't still have the unit economics working out, and everybody wants to expand in the country. Nobody has really figured out in terms of is that model making sense for the country. It's a very fashionable business. Now, us being different, Russell, I mean, we don't even land because we're not competing with them. They're our peers. All these cafes, I call them as our peers, right? Because they're not competition. We're a different segment. We need cafes and we need up coffee. They're two
right.
different segments. We are catering to the coffee drinking people. They are catering to people who want to sit and have coffee,
Certain, right.
right?
Third
So
third
it's a very
place, right,
different.
kind of.
Now, in cafes, do we need 10 companies? I don't think so. I think In a couple of years, there will be two, three players who will be winning the race. And we will be having, just like any other industry, there will be consolidation. But then there will always be smaller boutique cafes, and there's a market for that. There will always be a cafe in Bandra, which is doing great in Bandra. The moment they step out and go to Kormangla, they split apart. Right. There will always be cafes, individual boutique, unique cafes. It's just luxury and that kind of experiences. But will there be chains being born out of India and there will be 10 chains? I don't think so.
And Luckin become Luckin because they have huge number of counters or outlets, like 10,000 or more.
40,000.
40,000.
30,000 last I checked. 30,000
Wow.
last I checked.
Wow. So what's your assessment? How many stores you need to make a certain impact in India?
So no, I mean, for us, I think we should be 1,000 stores to make a definitive statement.
Okay. By when?
We're planning the next 2 to 3 years.
Okay.
We're almost touching 100 now. And then eventually in a decade, we want to be 10,000. But that's a long journey. I don't want to commit, but that's where we want to get to. That's a dream of that we want to get to, right? And that's a depth that India will also evolve. But near term, next 3 years, 1,000 outlets is what we look at when we see also that the business is substantially larger and impactful and also helps solve the problem of accessibility to great coffee at right price in the country.
My last question, Abhijeet, you are working on a different model, asset light model, cheap coffee, grab and go, not cheap, but not so expensive. This model can be replicated. People can copy it. Tomorrow somebody will try to beat you in your own game.
A fantastic question, Russell. I always say F&B is not a barrier to entry business.
Right.
F&B is a barrier to scale business. Which is the biggest F&B company in the country? McDonald's?
Hindustani beverage or FMCG?
No, F&B, right? The largest F&B.
F&B is like, Pepsi or McDonald's.
Let's
right,
say QSR. The largest is McDonald's and Domino's.
The largest is Domino's, right? Yeah.
Right. McDonald's sells burgers. Domino's sells pizzas. Are there not any company which sells burgers and pizzas? Plenty.
Yeah.
Are any one of them even near to them? Half of the revenue? None. Right. So I always say F&B is not a barrier to entry business. Any Tom, Dick and Harry can open it tomorrow. It's a barrier to scale business. So obviously, when people want to open, they'll open 5, 10, 15, 20, end up franchising, end up doing things. And that's when the process, tech, efficiency builds into their heads. Unfortunately, there has not been great success stories being born out of India when it comes to Indian-born food and beverage companies. We want to break that jinx, right? Because a lot of companies have not been built on right fundamentals. And we are building the way we are building. Hence, we are focused on technology. The number that I was quoting to you, that our app use rate is above 40%, which is 3 times of the next F&B player in the country. Like people don't even have in single digits, right? Because we have built it differently, right? We say 5% of our revenue comes from subscription. People pay for 10 coffees and 30 coffees in advance because it makes sense. It's a win-win. Nobody in Indian F&B ecosystem ever has solved subscription as a model because nobody wants to repeat, right? Now, these are the first principle thinking and the first principle where we build a company where we can expand faster. We can do more in less, right? And be still religious. Now, these are the factors where I don't really worry about competition. Competition will come, and I think it's a great validation of competition. There are plenty of companies actually in the market not trying to build up coffee, right? And last day I was speaking to a broker in Delhi, and the guy said, at least in the last 2 weeks, there have been 3 people who have come to them and said, I need a coffee kind of shop. Right? So now everybody wants 100 square feet, small units, low capex.
So you are giving ideas.
Which is fine, Russell. I think we are building the market. Like 3 years back, nobody could have thought that a grab and go format can work in India. Today, we have validated that it works. Unit economics are great. And we probably be the first coffee company ever to be profitable in first 4 years. And that's something where we are chasing to, right? People have not been profitable in like 15 years, right? Now, that's the target. That's the goal. We want to build a model, make it profitable, make it sustainable. And that's the idea we have in mind to build the entire coffee system.
And correct me if I'm wrong. Somewhere you mentioned you want an Indian brand which can go global. Is it what I'm hearing? Like, you have global ambitions as well?
To have ambitions is great. I do have it as well. And we do have it as well, but not something at this point in time. I think the problem of on-the-go coffee is more in India. There's a bigger demand gap in the country. And we are very focused in solving where we are located and doing it at the current time.
India's market itself is very huge, which will keep you busy at least for some years and decades.
100%.
On this note, thank you very much, Abhijeet. Appreciate your time.
Thanks a lot, Russell. Pleasure.